Thank you for joining me. I'm Alex, and I want to talk about a company I really like, which is Beyond Meat. And as you can see, the stocks are still on sale, and they've been on sale for all of last week. So I actually did some buying there. So what they do is plant-based meat alternatives, and that means that they basically sell burger patties and many other things that taste like their beef or sausage or other stuff, but they've never seen an animal. So current price is $89.65, which means they lost 15% on Friday, which means there's a sale going on, and I wanted to figure out if it's a buy at these levels and what we can expect in the future. So market cap is $5.5 billion, so they're definitely not small. Dividend is 0, and it's not going to change within the next decade or any time frame that makes it reasonable to include that in any analysis. Revenue, $298 million, which is up from $88 million, so basically tripled and then some. Earnings negative $12.4 million, which is up from negative $29.9 million. So going in the right direction and supposedly positive next year, but I really wouldn't count on it, and I don't think it really makes a difference if the forward PE is 286 or 0. Current PE is negative 270, so it kind of like turns around in the next year. So we go from a slight loss to a slight profit, and I don't really think that swing really makes a difference. So I don't really care what they do right now, but it is a good sign that they think they'll be profitable next year. That is a really huge sign. So total assets, $452 million, tripled from last year. Total liability, $67 million, slightly up from last year, which again, very good sign. Total stockholders' equity quadrupled from last year and then some. So there you go. So overall, things obviously going in the right direction. Everything seems to be going well, and the outlook is pretty good. You can't really argue with a company that's tripling their income year over year. Obviously, revenue $300 million is not huge, but tripling that is pretty amazing, or tripling $90 million. Obviously, they're currently investing all the money they have into building more facilities, trying to satisfy the demand that is definitely there. And so they are kind of in the same problem as Tesla is, which is they cannot satisfy demand because the demand is so huge right now, and there are competitors, but there's not many of them. So Beyond Meat, you have Impossible Foods, which obviously also a great company, and they make the Impossible Burger, the Impossible Whopper, and they are more focused on restaurant chains than Beyond Meat is. Beyond Meat makes stuff that you can buy in the grocery store and make yourself. But Beyond Meat also, gets into restaurants and everything. So there are competitors, and what I said in my last video is that one thing that scares me is that because they couldn't satisfy demand, German discounters, for example, are trying to produce an alternative that they can sell at a massive scale in Germany. And obviously that would be a problem if they manage to do that successfully. The other thing that scares me is that both Beyond Meat and Impossible Foods basically have the same product, and I'm not sure I could tell them apart if I tried. And so given that two separate companies came up with basically the same product, that makes me wonder whether or not that there is really a huge competitive advantage to these companies, or if a third company could just come up and make a competitor without much problem. Obviously, for someone like McDonald's, it would make sense if they could produce an alternative at scale for all their restaurants and satisfy demand. I'm just not sure they're willing to spend the money. I assume they're researching things and wondering if it's possible at scale, and how much they would have to invest to actually get there. But so far, they're not there. No one knows how far they are, obviously, but they're not there, and so I wouldn't really count on them getting there, because obviously for these companies it's much easier to just invest in a company that already has the product than to develop the product themselves. So overall, obviously, dividend investors are just out. Value investors are just out, because obviously you don't want to invest in a company with negative earnings. You don't want to invest in a company with a PE of over 20 or over 200. So that's kind of a thing where you need to look at the growth. Warren Buffett is a value investor, and he looks very far out and kind of goes beyond the 10-year mark to actually value what the company will be worth in 10 years and whether or not that makes it worth to invest now. And I think that that really makes sense here. And the problem is that we cannot assume any specific growth that this company may have or may not have, because we know that the demand is greater than the supply, but we don't know where exactly the demand is, and we don't know where the demand will be next year. It could be that they could be growing at, triple their revenue every year for the next decade and still not satisfy demand, or it could be that they double their revenue next year and that's all the demand there is for the price point anyway, and that's the end of it. So I would say that conservatively, they could probably grow at 100% growth rate for the foreseeable future and not be any worse off. The problem with that is that current price to sales ratio is almost 20. So if they double their sales, it would be 10. If they double it again, it will be 5. That would be a reasonable price to sales ratio. Beyond that, if we go 10 years out, I think that if everything goes right, they could be very valuable and they could be a good buy right now. I think it just mostly depends on your risk tolerance and what you think the demand is and what you think the risk factors are and what you think that other companies can accomplish in the same space in the next 10 years, and whether or not there will be more capable competitors than Beyond Meat and Impossible Foods and some others can handle. So for that reason, I think that I will buy a very small stake in this company right now because it's on sale. It's on a huge sale. And I'm just going to watch the space in the future. I will not be investing over 1% of my portfolio into Beyond Meat because things could go south very quickly and without much warning. And I just don't know what the competitors are working on. So I think that 1% of my portfolio into a huge growth stock that is not profitable and really needs to double their revenue multiple years to even make it worth it is kind of a risk. So we're kind of investing right now for having a payoff in 3 years or so at the very earliest. So I think it's a huge growth opportunity, but I think that the product is amazing, the demand is there, and the only thing that could cost us here is if there were really big competitors entering the market and having a similar or even better product. Better is going to be hard, but similar I don't think is really a problem for someone who wants to invest a lot of money. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.